I overpaid the property tax on my own house for years before I found out I never had to. I am over 60, I own the place, and still nobody, not the county, not the bank, ever told me there was one form that could freeze what my home was taxed on. I just kept paying it, the way you probably have been. I am Walt, by the way, one of you, a fellow senior who finally sat down and dug through these forms, not an expert up on a stage. So let me save you the years this cost me. That is the whole game with everything in this video. 5 bills and taxes, the law lets you stop, lower, or freeze once you pass 65, and not one office that collects them will ever call to tell you to stop. I found that out the slow way, so you will not have to. So let me be straight with you first, the way the other videos on this will not. People love to say that seniors are legally exempt from 5 bills. That is rounded up. Out of the 5 I am about to hand you, exactly 1 is a true exemption you can stop paying. 2 of them only shrink what the taxman counts against you, which is worth real money, but it is not the same thing. And 2 depend on your income, so there is a line, and I will tell you exactly where it falls on each one. You have heard the old line, the only 2 things you can count on in life are death and taxes. Well, nobody has come up with a form for the first one yet, but the taxes, once you are past 65, bend a whole lot more than anyone ever bothered to tell you, and I am going to show you exactly where. And I am not going to dress a tax deduction up as a bill you get to skip. Stay with me to the end, because the last one is the deepest help on this list, the kind that can wipe out a medicine bill people have been splitting pills in half to afford. Get a pen. By the end, you will know the exact office to call for each one, and what to say when they pick up. So let me start with number 1, and it is the one I just told you cost me for years, the property tax on your home. It is the one true exemption in the whole list, and it is also wrapped in the biggest lie. You have heard it. You just stop paying property tax when you hit 65. That is not how any of this works, and believing it is how people fall behind and lose sleep. Here is what is actually real. Almost every state in the country gives homeowners past 65 a way to cut that tax bill down, and in a lot of places, a way to freeze it. There are usually 2 pieces. The first is a senior homestead exemption, which knocks a chunk off the value your home is taxed on, so the bill shrinks. The second, and this is the one people miss, is an assessment freeze. You file it once you qualify, and it locks the taxable value of your home at that year's number. So as home prices keep climbing all around you, the value they tax you on stops climbing. And that freeze is worth more the longer you hold it. Every year prices go up and yours stays put. The gap between what the house next door pays and what you pay widens a little more in your favor, quietly, in the background, with no work from you. Now here is the catch I want you to carry in the door, because the other videos leave it out. A freeze holds your assessment steady, not your final bill to the penny. If your town raises the tax rate itself, the bill can still nudge up a little. And in most states, this help has an income limit, so there is a line to clear. There is also a separate thing called a deferral, where the county lets you put the taxes off, and that one is not a break. It is a loan against your house that gets paid back later, so do not confuse the two. What you want is the exemption and the freeze. One phone call sets it in motion. Call your county assessor, or in some states it is called the appraisal district, and say you are 65 and want to apply for the senior homestead exemption and the assessment freeze. They will tell you the income limit, the deadline, and the proof to bring, which is usually just your identification, the deed, and something showing you live there. In many places you have to refile every single year, so the day it is approved, write next year's deadline on the calendar. Fewer than half the seniors who qualify for this ever file it. That is not your fault. It is a form nobody hands you. That first one is the tax on the home you own. The next two live on a piece of paper you already fill out every spring, your tax return, and there is fresh money sitting on it this year that almost nobody has claimed yet. Which brings me to number 2, and this is the newest thing on the list. So new that most people filing have not caught up to it. There is a brand new deduction just for people 65 and older, and it is worth up to $6,000 for a single person, $12,000 for a married couple where both of you are past 65. It came out of the tax law passed in the summer of 2025, and it runs for the tax years 2025 through 2028. Here is what makes it unusual and worth your attention. You get it whether you take the standard deduction or you itemize, which almost never happens with these things. It does not put a check in your hand. What it does is lower the income the government is allowed to tax. And for a lot of retirees, that is the difference between owing at the end of the year and not. Now the honest catch? 2 of them. It starts to shrink once your income climbs past $75,000 a year if you are single, or $150,000 for a couple, and above that, it fades out to nothing, and it is temporary. Unless the government extends it, it is gone after 2028. So this is a 4-year window, and any year in it you do not claim it as money, you simply hand back. You claim it right on your federal return, and if doing your own taxes makes your head hurt, there are people who will sit down and file it with you for free. I will come back to who they are, because they matter for the next one too. Because that new $6,000 is not the only deduction hiding on that same return, and this next one has been there for years while people quietly overpay by skipping it. So that brings me to number 3, the extra standard deduction for being 65 or older. On top of the regular standard deduction that every taxpayer gets, once you cross 65, the law adds an extra amount on top, somewhere around $2,000 if you are single, and around $1,600 for each husband or wife on a joint return. It stacks right on top of that brand new senior deduction I just gave you. So the two work together. This is about the easiest money on this whole list to claim, and it is also the one people lose the most on, because they file in a hurry, they miss the box that says they are 65, and they leave that deduction sitting on the table. There is one catch worth naming. This extra amount only helps if you are taking the standard deduction, not if you are itemizing every little thing. For most retirees, taking the standard deduction is the right move anyway, and this is where those free helpers come in. There is a free program called Tax Counseling for the Elderly, and there is AARP Tax-Aide, and they will do your return with you at no charge and make sure both of these deductions land where they belong. Trained people, no cost, no product at the end of it. Use them. So those were the 2 that live on your tax return, the paper money. The next 2 are a different animal. They are not about what you file in April, they are about the Medicare card already in your wallet, and the second of the 2 is the single largest number in this whole video, so do not drift off now. The nearer one is not a deduction at all. It is a bill that leaves your Social Security check every month before the money ever reaches you, and for the people who qualify, it can be shut off completely. That is number 4, your Medicare Part B premium. Right now, that premium runs a little over $200 a month, which comes to right around $2,400 a year, pulled straight out of your Social Security before you see a dime of it. For seniors under a certain income, there are programs that pay that premium for you, and they are called Medicare Savings Programs. There are a few of them. The most generous one does not just cover that monthly premium, it also picks up your Medicare deductibles and the copays, so your out-of-pocket at the doctor drops toward nothing. And here is a right almost nobody knows they have. Once you are in that top program, a doctor or hospital that takes Medicare is not allowed to turn around and bill you for those leftover charges. If one tries anyway, and some do, you tell them you are in the program, and you call the office that signed you up. That protection is the law, not a favor. The other two mainly wipe out that monthly premium, which by itself is that $2,400 a year back in your pocket. Here is the honest line, and it is the whole story with this one. These are based on income. For a single person, the cutoff sits somewhere in the range of $1,400 to a little over $1,800 a month, depending on which program and which state, and it is higher for a couple. States also look at savings you have sitting in the bank, though your house and your car do not count against you. And one of these programs runs out of money each year and goes first come, first served. So if you think you are close, you apply early and you apply now, not in December. You start it with one call to your state Medicaid office or to your local SHIP office, which is a free Medicare counseling service in every state that exists, just to walk you through exactly this. Tell them you have Medicare and you want to apply for a Medicare savings program. If you are turned down because you are a little over the line, ask them what else you qualify for, because the answer leads straight into the last one. And the last one is the deepest help on this whole list, the one I told you to stay for. Number 5, and it is called Extra Help. It is the program that goes after the prescription drug bill, the one that does the real damage in this house, the one that has people cutting pills in half and skipping refills to stretch a bottle. When you qualify for one of those Medicare savings programs I just walked you through, you get extra help automatically. You do not lift another finger. But you can also apply for it on its own, through Social Security, even if you miss the others. What it does is bring your drug costs down to a few dollars for a generic and under $13 for a brand name, and it can knock out your drug plan premium and deductible on top of that. Social Security itself puts the value of this at around $5,700 a year to the people who get it. $5,700 on the exact bill that scares this generation the most. Sit with that number for a second. That is not a coupon, and it is not 10% off at the register. That is most of a year of prescriptions handed back to you. The pills you have been counting out and stretching. The refill you keep pushing to next month. The catch is the same one as the last program. It runs by income, and the line sits under about $23,000 a year for a single person, and around $31,000 for a couple. If you are anywhere near that, you apply, because I have watched people talk themselves out of a $5,700 benefit over a couple $100 of income they were guessing at. You do not guess. You let Social Security run the numbers. One call to Social Security, or one form on their website, starts it. So here is the year, counted straight. One of these, the property tax, is a true break on a bill you own, and in a lot of states it freezes, so your bill stops climbing, while everyone else's keeps going up. Two of them, that brand new $6,000 deduction and the extra standard deduction, do not stop a bill. They lower what the government is allowed to tax, and for most retirees, that is real money kept year after year. And two of them, the Medicare premium help and extra help with your drugs, depend on your income, so there is a line, but the payoff behind that line runs into thousands of dollars a year. Nobody is exempt from 5 bills. But between a form at the county, 2 lines on your tax return, and 2 programs with your Medicare, there is more money on this list than most people pull back in a decade of clipping coupons. And every last piece of it runs on the same quiet arrangement. The county keeps taxing, the premium keeps leaving your check, the pharmacy keeps ringing you up full price, and not one of them is going to call and tell you to stop. So you make the calls. Asking for what the law already set aside for you is not asking for charity. It is collecting what you were owed the day you turned 65. Now do one thing with this before you close it. Think of the person in your life who needs it most. The friend stretching a fixed income to the last day of the month. The widow doing the property tax bill alone at the kitchen table. The neighbor rationing a prescription he cannot afford. And send this to them today. Your 2 minutes might be the thing that saves their whole year. Then tell me in the comments which one of these 5 you are going to go after first, so I know where to dig deeper next time. And that free checklist I mentioned at the start is sitting ready the moment this channel crosses 1,000 subscribers. So if this helped you, subscribe and help get it over the line. Thank you for that.